Good morning and welcome to Stock Market Today for Wednesday, July 23rd, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider hitting your inbox every trading day before the market opens. So some wild weather here in New York. Hopefully everybody in the Northeast is safe, but nonetheless, markets are going to open today, and let's get started. U.S. equities finished mostly higher in Monday's trading. Technology and energy finished higher on the day, while consumer staples, materials, and utilities underperformed. Treasuries were flat. The dollar was stronger on the major crosses. Gold finished slightly higher. WTI crude closed up 80 basis points on the day. The positive performance in tech was driven by the semiconductor stocks on the heels of some positive company comments last week, as well as bullish research reports on the equipment stocks yesterday morning. As we get to the desk this morning, futures are higher by about 20 basis points to start the day. Asian markets are higher overnight, with Japan up nearly 1%. European markets are stronger as well. Treasuries are weaker with the curve flattening. Dollar is stronger on the major crosses. Gold down 60 basis points, and WTI crude is adding 10 basis points here this morning. So as we dive right into the S&P 500, chip stocks lead markets higher on the day. That's fine. What we're concerned with here is holding above this 2950 level for the S&P 500 as the market is kind of pulled back over the course of last week. We're watching this 2950 level closely. That is support, 2900 to 2950. Resistance is near the 3000 mark. Looking for the RSI to hold bullish ranges during the pullbacks, and so far so good. You can even notice that as the market ticked higher yesterday, the RSI ticked higher before even reaching 50. That is a positive development from a momentum standpoint. Should the market pull back and test this support zone, we want to see the RSI hold above 40, ideally above 50. But 40 is the lower bound for bullish ranges for this indicator. If 40 holds and support holds, that tells us that the trend is still up and still has momentum behind it. Chaikin money flow is bullish, although it is declining. Remember, I pointed out yesterday that over the course of last week, we saw a bit of a character change where the market was tending to close near the low of the day. When the market closes near the low of the day, that's going to have a negative impact on Chaikin money flow, because Chaikin money flow takes into account where a product closes in its range on the day. Slight character change. We want to see it reverse course and just give another indicator confirmation to the price strength that we have seen of late. Your market in a minute now. What am I talking about? In my note to Chaikin Analytics clients, major markets move higher, led by tech. Positive analyst comments and the chip stocks higher, mainly in the memory space. Bank earnings failed to serve as a catalyst for financials. Remember, financials have had bullish fundamentals, right? They've been a bullish group within Chaikin Analytics based on our model, but we also need the market and model to be in agreement, and the financials just have not been able to outperform, and the bank earnings last week failed to serve as a catalyst. Healthcare continues lower after a counter trend rally, and as we mentioned, futures do point to a higher open here today. Let's look at the power bars now for the major markets. Dow, 6-5 bulls to bears. S&P 500 adds 22 basis points yesterday, 131 bulls, 85 bears. Actually a slight deterioration on an up day yesterday. NASDAQ was a big outperformer, led by those chip stocks. 30 bullish or very bullish stocks, 9 bearish or very bearish stocks. So still greater than 3-1 bulls to bears. Small caps, I just don't know what to say at this point. Continue to underperform, down 12 basis points yesterday, 502 bulls, 321 bears. Bonds saw an uptick, sending yields slightly lower on the day, and technology was your leading sector of the market, adding 1.15% on the day. Look at that power bar ratio, 30 bullish or very bullish stocks, only 4 bearish or very bearish stocks, and as we'll see a little bit later in the show, it really does have the best relative trend in the marketplace. Your stock of the day today now? Triple S Management comes from the medical care group, closed at 2650 yesterday, up 1.92%. GTS is the ticker symbol, has a very bullish Chaikin power gauge rating, and that's due to very attractive financial metrics, very strong price volume activity, and strong earnings performance. So when we take the 20 factors, 5 in each of these categories, we come out with a very bullish rating. So we have a very bullish stock and a strong trend and a strong industry group. So we know we're fishing in the right pond, type of name we want to consider for a long idea. When we run through our analysis here, we can see that we've been on that bullish or very bullish rating since mid-January for the most part. but relative strength has wavered. Right? We've gone from periods of outperformance to underperformance and back again. Now we're starting a period of outperformance ever so slightly, so that is encouraging. Money flow, solidly bullish, actually triggered a momentum breakout signal in Chaikin Analytics today as the stock is above the rising long-term trend line and moved higher yesterday. My concern here in the near term, twofold. First, healthcare stocks as a group are coming under relative pressure once again. And more specifically for Triple S management is that the stock is overbought. Our overbought, oversold indicator in an overbought condition. So for me, I want to add Triple S management to my bullish watch list. I want to keep an eye on it. All else being equal, I want to revisit this when it's oversold. So if it's still bullish or very bullish, if it's still outperforming with bullish money flow, stock reaches an oversold level, it becomes a much more compelling entry opportunity. Add it to a watch list here today. Sector tracker, move into the major sectors over the last 5 days. Tech, only group higher, powering forward by the semiconductor stocks yesterday, up 26 basis points over the past 5 days. Materials, financials, and staples are in the top 4. Industrials, utilities, healthcare are middle of the road. Energy remains near the bottom of the list. Discretionary giving some back a little bit, but if you read my note this morning and look at the relative strength in consumer discretionary, you can see it looks like a small counter trend pullback, maybe into a consolidation, but the weight of the evidence supports higher. Real estate and comms round out the bottom of the list. Remember, comms coming under pressure with that Netflix report last week. Our industry in focus now is telecom services, which over the past 6 months has underperformed the S&P 500 by 7.85%. And its power bar ratio, which measures future potential, is weak. 9 bearish or very bearish stocks, only 4 bullish or very bullish stocks, currently ranked number 16 of the 21 subsectors that we look at. It's moved down 1 slot over the past week. So some of the indicative names there, names you want to avoid or names where you potentially want to look for bearish opportunities if you trade to the bearish side: Iridium Communications, IRDM, Boingo Wireless, Wi-Fi, WIFI, and Ubiquity Networks, UBNT, all have very bearish Chaikin power gauge ratings. And let's take a look at Ubiquity here today, because I actually do think it sets up for a potentially bearish trade. Now, what do we have here? We have a very bearish stock with a weak trend, but it is in a strong industry group. So it's something, a little bit something to keep in mind. Now, bottom of the page here, ribbon tells us where we are and where we've been. Power gauge rating is bearish. Market and model are in agreement. Dynamic Duo are in gear here to the downside as the stock has a very bearish rating and is underperforming the market. Stock is currently overbought with bearish money flow. So you can see here this counter trend rally is actually being used to lighten up positions as money flow is bearish. Stock did trigger a sell signal here today, one of our overbought sell signals. So to me, Ubiquity Networks at the very least is the type of name you want to avoid. Or if you do trade to the downside, look at maybe the options market, see if there's a compelling opportunity using put options or bearish put spreads, if that's how you trade. But at the very least, we want to avoid Ubiquity Networks. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Halliburton, been one of our poster children for bearish ideas, up 9% yesterday following their earnings announcement, better than feared. AMAT, Western Digital, and Lam, all up for the same reasons. Positive commentary out of Goldman Sachs, some upgrades across the equipment space, positive commentary on the memory market for chips. That led AMAT up 6%, Western Digital up 5.5%, and Lam Research up nearly 4.5%. DaVita provided a company update, which sent that stock higher by nearly 5% on the day. AMCR down 4.7%. Didn't see anything company specific there. Kroger hit a 52-week low as it traded lower by 3.83%. Hewlett Packard, sell-side firm, cut their estimates on Hewlett Packard, HPE. Yesterday, took that stock down 3.64%. No real news on HBI to send that stock lower 3.4%. JW Nordstrom just continues to trend lower. Hit a new 52-week low yesterday, down 3.25% on the day. Diving now into the earnings update, and there's that Halliburton beat. Halliburton beat by 5 cents, sent the stock higher by nearly 10%. TD Ameritrade beat by 7 cents. Didn't see a ton of trading there in the pre-market. And then Cadence reported after the close last night. Cadence has been an absolute monster stock within the software space. They beat by 2 cents. likely an expectations miss, though, as the stock had gotten a bit ahead of itself, did trade down last night and is trading lower about 3% in the pre-market here today. Earnings season really ramps up this week. Remember, we said yesterday 147 stocks set to report this week. Before the open, key names, Pulte trading higher, Lockheed Martin, another key name to look at with a bullish rating, as is UTX. After the close, bullish names of interest, Discover Financial, DFS, and Total System Services, TSS. Neutral stocks that you want to pay attention to: Hasbro, Biogen, IDEC, Coca-Cola beat earnings this morning. Avery Dennison, some neutral names to look at after the close. Chipotle, big stock in the real estate space. And obviously with the chip stocks moving higher, everybody going to be paying attention to what Texas Instruments has to say after the close tonight. We'll also hear from Visa. Before the open today, Sherwin-Williams, Harley-Davidson, PNR, and LW all have bearish Chaikin power gauge ratings. And as earnings season progresses, Chaikin suggests caution when holding bearish stocks ahead of earnings. Taking a look now at what the main story was yesterday, and it was the chip stocks. Chip stocks lead the market higher yesterday. Here's the SMH, the Van Eck Vector Semiconductor ETF, relative to the S&P 500. We can see here, nice breakout and moving higher, confirmed by momentum as the RSI of this ratio moves into an overbought position. Ratio is above the rising 200-day moving average, and as we check back in with RSI, we can see a series of higher lows, a hold in bullish ranges on this pullback, and now a move higher. On an absolute basis, SMH is threatening its 52-week high as it breaks out of this consolidation. So you know how I feel about the semiconductors. They are a barometer for the market in general. To the extent that the semiconductors continue to work, that is a bullish dynamic for the marketplace, which is really interesting because we're coming up on August and September, which are seasonally weak months on average for the markets. Take your clues here from the semiconductors. If semiconductors remain strong, if the market remains above 29.50, you want to stay the course of looking at bullish and very bullish stocks in the leading areas of the market for additions to the portfolio. That's the game plan going forward. I'm taking cues from chips. I think you should too. Technology is the best relative trend in the marketplace. I wrote about it today. We talked about it last week. Tech relative to the S&P 500 continuing to work higher after this breakout. Breakout confirmed by momentum as the RSI becomes overbought. Again, look at this dynamic for the RSI. As it was moving higher, the RSI held above 50. That is your momentum confirmation. That is your shift into bullish ranges to let you know that this trend likely has some legs to it. Right? We can see tech above the rising 200-day moving average. Nice breakout here after pulling back to test support and now continuing higher from the breakout level. And what's really interesting, getting back to semiconductors, is that now they're joining the tech party. A lot of the tech was driven by software. A lot of the tech strength, rather, was driven by software. Now we're getting semiconductors into the mix. Positive analyst commentary, some positive ratings changes across that group. So that is all lined up to push the tech sector to new all-time highs, or on the verge of new all-time highs. So just when you're looking for your ideas, again, when we talk about strong parts of the market, we want to start looking in semiconductors. We want to continue to look at software. Those are leading industry groups within a leading sector of the market. So another leading sector of the market that continues to do well, in my opinion, is consumer discretionary. That obviously is a diverse group, so you just want to pay attention there. And if we're thinking about ideas, take a look at a name like FleetCor Tech. FLT, the ticker symbol there, has a bullish rating, strong trend, strong industry group. Bullish stock outperforming the market, is oversold with bullish money flow while remaining above the rising long-term trend line. We have some support around the 275 level. I'm looking at FLT today as my bullish stock idea in my note to Chaikin Analytics clients. And here you can see why. Our new checklist shows you the key factors that we talk about every day when trying to identify bullish names. You can see that 5 out of 6 of them are lined up green. And the only reason overbought, oversold is neutral or yellow is because the oversold indicator is still heading lower. If you want to wait for that overbought, oversold indicator to turn higher, that might actually set up a higher probability entry. But take a look at FLT today. That's going to wrap it up, folks. I will be back here tomorrow. If you're in the Northeast, stay dry. Have a great day, everyone.